So yes, hello everyone. We're recording. It's a new week and a new day, right? We have opportunity on the horizon, right? This week should be straightforward, right? Because like literally by looking at the economic calendar, we can see that there are no major USD news events until Thursday and Friday, right? Just by looking at that, you can, probably tell that we will have most of the volatility in regards to the US dollar and on Thursday, right? And if it's not on Thursday, so it's going to be on Friday, right? We don't want to, try to be too specific as if we know the future. Maybe some of us do. I'm kidding. No one knows the future. So yes, if we get sequential SMT, in regards to the weekly cycle, between Wednesday and Thursday, then that should set the, tone for a, intra-week trend, which should be quite explosive, going into Friday. So a trend should be established by then. Monday, Tuesday, and Wednesday, we will not, be expecting too much, but there will be opportunities if the things that we look for present themselves, right? But for markets to, move, we need for the market to move, we need, liquidity, engineered liquidity. So yes, before going forward, can you guys hear? Right? Can everyone hear? Just want to make sure. Yes. Okay. Good. So all we need is a cracking correlation. And remember that the thing that sets up one shot, one kill is a two-stage cracking correlation, which occurs between the weekly cycle and then it ends up, within the daily cycle. So for example, you'd have a cracking correlation between Wednesday and Thursday. Then you have one between the Asian session and the London session, or the London session and the New York session, right? So pretty much looking at the economic calendar, you see where, you should be, or the days, within where you should be focused on, right? Monday and Tuesday and Wednesday will be more difficult than Thursday and Friday. Does that mean that you can't trade on Monday, Tuesday, and Wednesday? No, that's not what it means, right? This is week one, right? This is the week where you don't expect too much, right? For example, this would be the agent session for the month, right? And, you guys know that basically already. That's basic stuff here. So Monday, what do you look for? If we have a cracking correlation between, last week's high or, the previous week's high, same thing, or Friday's high, between Monday and Friday, then we could expect some retracement or expansion in regards to the market condition or the market that you're looking at, right? And the only time you look to do something whenever there are no news events, right, is if we have a cracking correlation, right? And I'm just saying it again so you get it through your heads. And remember, and I'm going to say this as well again, I've said it before last week, you don't want to be, even if you win, right, you don't want to be championing your wins. You don't want to be celebrating your wins. If you lose, you don't want to be crying over your losses. You don't want to be stressed, right? You just want to trade, right? As long as you manage your risk, you've won, right? As long as you're doing good risk management, you've won, right? Have a target, right? Whether it's 2 hours or 3 hours, depending on, if you're accurate or whatever. But manage your risk. Like going into this week, if you're not someone that manages your risk and you've been on a winning streak, I got 3 funding accounts, or I made $10,000 last week. I made $15,000, whatever. you will lose all of that if you don't manage your risk. And anyways, let's look at the index futures chart. So currently, right, this is not, right, a high probability condition. We're in between, right, this range and this range, right? So basically we're near equilibrium in regards to most, well, pretty much all of these assets, which are closely correlated. However, right, I would expect a, push up, price to push up. So some form of expansion in regards to this asset class, because due to the fact that here we have price above equilibrium already, right? So I would expect the Dow to follow suit, right? And, take out these highs right here. And this is not high probability price action again, right? It is not. This is not the best price action. And this is due to the fact that, we have all these economic issues, right? The Fed is printing too much money, interest rates, mortgage rates, everything. The bond market, everything, is just affecting these assets right now. Because right now, the price action, how does it look? Stupid, right? It's difficult to participate in this market. And all of this was last week. And anyone that told you that they had fun trading this is lying to you, right? The best type of price action is range in price action, or, not range in price action, but price action that forms large ranges. Like, for example, you have here, price fell and fell here. Here we had price just rallying. That's good price action, trending price action, right? When you have price consolidating like this, right? And we do not have, any form of higher time frame SMT here, then, once we cross equilibrium, we could expect price to go higher. Like, for example, here, right? I'd expect price to take, these highs here than here, due to the fact that we have crossed equilibrium, right? I have no faith in this fair value gap right here. Right now, I'd expect price to at least trade above here, right? Right now. Here you can see that we have this asset, which is the S&P 500, trade above this fair value gap already, right? So if we cut through, you can see that here would be, where the fair value gap falls within this one. So my take on the index futures chart, I'd like to see price, go higher for now. There is no reason for me to do anything, and there is no sequential SMT. As you guys can see here, we traded above this high. Here, we traded above this high, and here, we also traded above this high. Why is this happening? Anyways, yeah, here, we traded above this high, right? Whenever we see things like this, right, and we have the bond market doing the same thing, then we could expect that that was the actual market structure shift, right? So even though it's difficult to, tell, the direction in these types of market conditions, which it is extremely difficult to do, right? We have consolidation here, a consolidation here, and we're within a range, and then we're at the equal, like we're at the lowest probability. Like it doesn't get much lower than this. I'm telling you, it does not get much lower than this, right? So lower time frames, would be better to be trading right now. And you need SSMT on at least the 50-minute time frame. And if you're using that, then you would need, that to be falling within the daily cycle. Also, the Asian session, out of every session today, the Asian session probably has the most liquidity above the highs and the lows, right? And this is something that I'm just throwing in here, right? So if you have a tracking correlation between the London session and the Asian session, what do you think will happen? Okay, we'll talk about that in the future. Here, right, and this is the Dow, right? We're using the Dow today, right? Here we have equal high. This is the 4-hour time frame, right? And this was our blank week, the Joker, if you will. So here we had a crooked correlation, whereas we had the low of this week trading below the previous week's low, right? And the closing below it as well. So I remember going into, last week, we expected price to trade above this high. But remember, price will not, be gravitated to our liquidity or buy side liquidity unless we have this here, a cracking correlation. So here, and this was 3 stages. So here we had SMT here between this week and this week. And then what did we have? We had SMT between Wednesday and Thursday. Okay, so we had SMT between this week here, this week here, then Wednesday and Thursday, right? After which we saw price fall back within this inverse fair value gap, but not any inverse fair value gap, right? Whenever you see the wicks like overlap like this, right? And there are times when there will be a, quote unquote order block here, but right here, there's nothing. Remember, wicks are gaps. So due to the fact that wicks are gaps, we will treat this as a balanced price range. Price falls within the next pass to our draw on liquidity after we have all of this cracking correlation occur, right? So we would expect price to, be gravitated to this high, right? Due to the fact that we have no cracking correlations here at the top, right? Everything is going as it's supposed to be. Everything is in line. Everything is symmetrical, right? And remember our rules of premium and discount, right? We want to see price trade below the low, or at least one of the assets within our triad trade below the low of the previous week if we are looking for a cracking correlation, right? So price trades below this low, there's a cracking correlation. Ultimately, immediately, this becomes discount. When is this, right? This swing low right here. When can we use this? When is this gap to be used as an entry? Whenever we have price trading back within the balanced price range while creating a failure swing between the current day and the previous day, or the current quarter and the previous quarter, while the other asset class is making a lower low. And this is how we'll function, right? And this is how you should function. And this is, the basic gist of it, but this is the model that we should be implementing, right? As you guys can see, getting in here, stop here, that's already like 4 arcs. You just need 3. You don't need more than that. Also, these highs, right? Whenever you have this, right, you have this high right here, form, which was our drawn liquidity. Then we have these high right here, fail to break above this one. Then we have another one, another failure swing. Right? When you have 3 failure swings, listen, when you have 3 failure swings and then you have a creeping correlation, in 2 stages, this will be a magnet, this high, which we already highlighted since practice like here, right? Also, right here, and this is something that you need to study, right? Here, you can see that we traded below this low right here, right? We did not do this in, the index futures. And the index futures and the interest rate triad, right? They should be moving in the same direction at all times. Whenever they're not, then that condition is low probability, right? Here, we traded below this low. Do you guys remember when price was around here and we highlighted this right here, this SMT? And we expect the price higher. If you go back in the group, you scroll up, you'll see it, right? We even talked about it, right? But what makes this right here and then you're going to see this all over the place. But guess what? People understand and people even believe in it. And that's what makes it amazing, because like only you will actually, believe it, because you will see it in action. You will see it working, right? And the fact that you're paying means that you take it seriously. If you don't take it seriously, go back in your notes and you look for everything to line up, it will not work, right? It will not work. 100% will not work. So when do you have explosive price action like this? First of all, you need liquidity. And if you go here, you can see the liquidity, right? And this is not who's cherry picking this. No. Remember, we highlighted this before this happened, right? If you go back in the chat, you scroll up, you'll see it. You will see it, right? Here, from this low to this high, right? And let's do this. Price came back down below the 50%, right? And this was the failure swing which created the intermarket sequential SMT, which allowed the second stage to distribute higher and clear these highs. So let's do this again. Here, we had sequential SMT, right? These lows, right? When price took this low right here, and we can go back here and let's see right here, and let's use for a clearer picture, right? You can see that, right? We did not take this low, right? And this is what we highlighted, right? We did not take this low. In the NASDAQ also, we did not take this low. So here, I love this new mouse. Like, it doesn't make any noise. Oh my God. It's amazing. The clicks were so annoying. I'm not even gonna lie. So here, right, between this week and this week, what do you see? We did not take this week, the low of this week up. Am I correct? Yes. So this was, what created the intermarket sequential SMT. Here you can see that we took this low out, right? But then what makes this more important, right? First of all, at these highs, we had symmetrical highs, right? So this was obvious buy side liquidity, right? What would make price gravitate to that? A two-stage cracking correlation. And for this, right, I'm not even going to give the name for what I'm showing you right now, right? I don't want it out there. Let people try to create a name for it, right? For now. But let's introduce it anyways. So here, we traded below the 50%. Here, we traded below the 50%. That's what created the failure swing between Tuesday and Thursday of last week. Here, Tuesday and Thursday, you can see that there was a stop run. I just love this because it's not like hindsight stuff, right? And remember, this was a withdrawal liquidity. So here, between Wednesday and Thursday, right, we had a stop run and price rushed higher. Here, we did not get that stop run, right? But what makes this amazing is the fact that here, between this one, this high, what do you see? We did not go below the 50%. Anyone like any light bulbs turning on yet? No, not yet. So here we did not go below the 50%. But here, remember, we talked about this. Do you remember? We talked about this. I'm pretty sure that you did remember, right? And then what happened? Expansion. So everything here has to happen for price to expand. It's perfect. It will repeat, but it takes time for, price to do things like this due to the fact that we have to have all these highs form, right? And then we have to have that time of low probability perception. Then we have price trade below this low, create intermarket sequential SMT, trade back higher, break market structure, trade lower. Then we have that second stage, which pushes price above this high. So this right here, you should pay attention to. No one will understand this, right? I can post this right now on Twitter. They won't understand. First of all, it's going to be like, what is this? Why is this happening? Like, this doesn't even make sense. Mirrored premium and discount. Mirrored premium and discount. Right? Listen, it's not that it's just mirrored premium and discount. What else is it? What led to this? Even making sense. And this is how you can just be like, oh, the interest rate tribe, it's suggesting higher prices. The interest rate tribe is suggesting lower prices whenever you have things like this. Remember, this is why I expected this market to go higher. But I expected this to occur because this didn't even happen yet, but we'll talk about that another time. And remember, right now, the market is not even high probability. And do you know why is that? And people are like, oh, for the last week, they've been saying it's not high. What do you want me to do? Lie to you? I'm not going to lie. When it's high probability, it's easy to trade. Then it's evident in the markets, right? Whenever you look at the markets and it feels as if you're getting a headache, then you just step away. You do something else that you're good at, something else that you like to do. Find a hobby, read a book, right? If you're seasoned, you've been doing this for a very long time, then every condition may be easy for you to navigate within. But until you can look at a chart and it's just there, just like how this was just there, you do nothing. Until Wednesday, right? I'll be updating the charts, sending charts, and doing other things, right? To ensure that I get this information over to you, right? As swiftly as I can, smoothly as I can, to make sense, right? Looking at your questions, trying to apply it to the lessons. And yeah, pretty much that's it for now this week. So until we talk again, have a wonderful evening.